Hi guys, good morning and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends and most importantly, all your stock queries. But before we kickstart, let's see what the global handover looks like. European markets closed lower on Friday, tracking global uncertainty as investors chart the course for monetary policy and continue to digest corporate earnings reports. Stoxx 600 ended 0.8% lower. Other bourses shed over 1% each, while FTSE ended mildly higher. On Wall Street, the S&P 500 closed down 1.3%, Dow dropped 0.9%, and the Nasdaq gave up slightly over 2% in trade. Stock futures fall on Sunday as Wall Street looks ahead to Jackson Hole. Meanwhile, Asia markets drop as investors weigh concerns over Fed hikes. SGX trades below 17,700, signaling a weak start for Indian markets. Stocks in the spotlight today: AstraZeneca, IIFL Finance, CAMS and Oriental Hotels. We also discussed if it's still the right time to buy auto stocks. Okay, let's get going and bring on board our technical expert. Raja Venkatraman joins us to talk about individual stocks and the markets at large. Raja, good morning and thanks for joining in. Talk to us about the trade setup. We've breached 17,700 on the SGX Nifty on the downside. Tell us what to expect for today's session.
Yeah, good morning, Karunya. So what we are seeing in the entire market is that we tried to create a new high in the month in this year. But what has happened is that we continue to falter at 18,000 on the Nifty or 40,000 on the Bank Nifty. Well, that will continue to be a very important inflection point. We are at an inflection point right now. We tried to go up, and if you take a look at the kind of pace that we saw in Nifty, it was much faster and much swifter and beyond everyone's expectation, which we saw in the last few weeks. But now what has happened is that at higher levels, we also have to take into cognizance the kind of environment which we are in. And we are in a very uncertain environment. Well, we are in an uncertain environment most of the time, but now especially with the currency weakness kicking in, we will continue to expect the pullback. Well, now we have got a pullback which we all have been waiting for. Now the question is whether is it a pullback to buy into? But when I take a look at the intraday charts, I find that the pace of the pullback and the way the pullbacks are emerging are quite indicative of some profit booking emerging, considering the spate of run which we have witnessed. So I would envisage that this reaction which we are seeing could definitely threaten the support levels in Nifty and in Bank Nifty. So in Nifty, I would wager a support level. Immediate support levels are emerging around 17,600. And 17,300 these are the two support levels which I would watch out for till I say that the trend has turned once again down. Now, whether to buy on dips, well, the caveat here would be that on dips, we got to see what kind of sectoral play is going to come in. And based on that, I would be taking my action. But for the moment, it looks like there is going to be some reaction to the way down. And SGX Nifty is giving us a hint, but then we do not know because we are heading into the monthly expiry week and we would definitely witness some volatility. And we are also factoring some hope factor here. People are hoping that this trend will continue, but then we got to take fact or cognizance of the reality, which is that profit booking are going to emerge. Based on the chart setup, we are once again seeing something called as an engulfing pattern or a long body bullish bearish candle on the charts, and this is how the descent started. And I hope that this is not a trigger of more descent, but then we is at a resistance zone. Nifty is also at a resistance zone. So this week would be a more bearish bias as we step into the last week of the August expiry.
Okay, all right. Let's talk about some individual stocks as well, which could be buzzing in trade or at least in the limelight, if not buzzing, really. One name is AstraZeneca Pharma. They've received important market permission from DCGI for olaparib film-coated tablets. Now, these are additionally indicated as a monotherapy for adjuvant treatment of adult patients with early breast cancer. So, some positive news flow coming in terms of regulatory nod for AstraZeneca. On Friday, we saw the stock rally in trade as well, over 1.5%. How could it react today and in the days to come? What are the technicals telling you for AstraZeneca?
Yeah, the news definitely seems to be encouraging, but the price definitely is not, as it has spent the entire the calendar year in a sideways phase. So an important level for this stock is around 3,200. So unless 3,200 is really surpassed, I would not wager into the stock right now, but then the stock would definitely come in on my tracking list, and the overall setup looks to be promising, but then the promise will unfold only beyond 3,200.
Yeah, okay. All right. What about Oriental Hotels? There's been some fund action there. Nippon Life India Trustee has cut stake in the company. They've offloaded close to 2 lakh shares via open market transaction. So after this particular offloading of shares, their shareholding is reduced to 3.16% versus 3.27% earlier. So nearly about 0.1% stake is what has been trimmed. Talk to us about the technicals of Oriental Hotels, what the volumes are like and how the chart is playing out.
Yeah, so when you take a look at the chart of Oriental Hotel, the stock seems to be trying to find its feet, but then the challenge is that at every rise, it is witnessing some supply, and the overall prospects of the particular chart setup is indicating that it could witness some reaction to lower levels, and the way it has always been moving for the last few months, you can see that there is continuous pressure emerging at higher levels. So if one were to look at it from an investment point of view, I would say that it is an avoid from my side.
Okay. Not looking very great on the charts. What about IIFL Finance? Again, bulk deal action here. CDC Group has exited IIFL by selling its entire shareholding of 1.35 crore shares. Now, this particular trade or this particular sale has happened at an average price of 335.64 per share. Meanwhile, Morgan Stanley Asia has acquired 35 lakh shares in IIFL Finance, a buying price close to 335 rupees as well. Talk to us about IIFL. On Friday, we saw the stock hit about 5% lower, and the overall trend has also been quite volatile last 1-2 weeks. What do you think lies ahead?
So, like you rightly said, there is fair amount of volatility in this stock, and well, it has received some patronage from the broking community. But overall, factors continue to remain that it looks to be a short-term play kind of an approach. So, I would look at it above 360, where we can expect targets towards 420 as a short-term play. But then I would not look at it from an investment point of view, because the overall structure continues to be quite tense, and every time you're not able to get some kind of traction in this particular stock, it has not been able to witness any kind of trend if you even take a look at the last 2 years. So I don't think of it as a medium term or a positional play, but more of a short term play.
Okay, fair enough. Talking about, selling stake and selling shares in companies, I want to also flag off Computer Age Management Services, CAMS, wherein the promoter has offloaded close to 3.8% stake. The promoter here is Great Terrain Investment, which has sold 18.55 lakh shares of CAMS at 2,306.2 rupees a piece. Now, clearly on Friday, we saw some selling come by, down 5.5%. Perhaps in anticipation of this particular development and this particular announcement to come by. Talk to us about CAMS and how the technicals are placed. Should investors look at it at these levels?
Yeah, so in your show itself, I had pointed out that CAMS had topped out much earlier before the market, way back in August. And since then, there has been continuous pain in the stock, and at every possible rise, there has been some selling pressure. So I had advised right back then that one should exit this counter, and that view has not changed. The shares, the price continues to remain under pressure. Even today, you are seeing that it is witnessing some steady reaction to the way down. So I would not be an investor in CAMS. Rather, if I have my investment, I would look to exit CAMS right now.
Okay, all right. Raja, I request you to stay on with us. I want to also touch base and talk about fundamentals with our next guest, Mitul Shah. He's here to talk to us about auto stocks, and as promised, we will give you an update on what's going on here. Mitul, thanks for joining us. What's happening with the auto index and the sector at large, actually? The auto index has been trading near its record highs. A lot of these solid OEM, large-scale companies have been doing very well. What's the trigger here?
Yeah, hi, good morning, Karunya. See, auto sector witnessed huge pressure a quarter ago because of the three factors. One thing was crude was going up, commodity cost, inflation was very high, and in addition to that, biggest hurdle was a chip shortage. However, in last 2-3 months, all these things started getting resolved to some extent. As we have seen that crude prices come down recently in last 1 month. Additionally, commodity cost in terms of metal prices, particularly steel and aluminum, has reasonably down from the peak level, which is a key raw material for all these OEM companies. And slowly, semiconductor issue also seems to be getting resolved, and that is why this entire index has performed very well. Almost few stocks given return to the tune of 70% from the low level they recorded in the month of February or March. So this is definitely very big outperformance by this entire sector, and few companies like TVS or Minda or even Escorts, Mahindra giving 60 to 70% upside in last 4 months.
Okay, all right. But given the recent run-up that has happened in these many of these stocks, is it a still attractive opportunity or an attractive bet at current levels? How are you guys looking into the valuation scenario?
See, this sector has given huge run-up, so definitely upside from the current level seems to be limited. But one should remain selectively positive, or one can buy selective companies or sectors. As we know that two-wheeler is not picking up the way it was expected. I would say that to some extent monsoon disparity or uneven monsoon is impacting rural sentiment in few pockets and few geographies. And that is why this sector, two-wheeler as a sector, not doing well. Though there is an improvement, but recovery is not to the extent expected. Similarly, commercial vehicle improvement is there, but pace is not high. But on the other hand, passenger vehicle segment seems to be most promising. As we all know, there is a huge waiting period for most of new launches in the range of 1 to 2 years. So this sector and companies, ancillary companies associated with this sector, one should look at this. And this here valuation is slightly high, but we believe that valuation will remain higher for this sector, and these companies will enjoy getting premium valuation. So there is no harm in buying these stocks compared to two-wheeler sectors or commercial vehicles. And additionally, we like tractor segments also, that post-monsoon, definitely festive season would give reasonably good volumes, and performance on the margins front would improve with the commodity softening.
Okay, makes sense. But, a lot of people are feeling a sense of regret or a sense of FOMO for not being able to invest in auto stocks all this while, when there was solid momentum, solid up move happening in many of these names. How should they go about picking and choosing the right auto stock instead of just jumping the bandwagon and just buying whatever everyone else seems to be buying?
See, fundamentally, we always look at two parameters. One is a growth parameter where the valuation generally remains high, but as I stated, that few companies will enjoy getting premium valuations. And another parameter is valuation wise attractive companies. So, from these two different parameters, on the growth parameter, we would be happy to advise strong buy recommendation on Minda Industry that is recently renamed as Uno Minda. Here we believe that going forward we will see number of new features which even we have not imagined in every cars and two-wheelers, particularly on the passenger vehicle side. Company has done lot of research on the various new components which will keep adding value, and their content addition will increase their revenue growth. So then we believe they will continue outperforming by 8 to 10% to industry growth going forward, and that is how valuation will remain high. So we would be suggesting buy on Minda Industry at this level. In terms of valuation wise, company like Escort is still trading at much lower valuation than entire auto pack, roughly around 18 to 20x, which seems to be much lower compared to most other companies trading about 20 multiple. So there would be some pressure on tractor volume for maybe next 1 or 2 months. But going forward, we believe that volume will pick up post monsoon, as well as commodity softening will impact the margins positively. And we should not forget that this Kubota tie-up will create synergy benefit for the company going forward, and company is going to get a remarkable presence in the global market with the help of Kubota, and that's why we remain positive on Escorts Kubota also.
Okay, all right. Mithul, thank you so much then for joining in and for sharing your views and your insight about the auto space and which stocks, which segments within the entire auto universe look attractive at the current levels. All right, Escorts and Minda Industries is something that he had pointed out specifically. Let's touch base once again with Raja Venkatraman. And Raja, any of these names stand out for you? And overall, if you could share your view on Nifty Auto Index, is it still looking bullish on the chart?
Yeah, so let me first get set with the auto index. So when you take a look at the auto index, yes, it had started its run much in advance, and we saw a healthy run up in the month of July, and that is what prompted the auto sector to get a good head start. Now, as we have seen the entire move over the last few weeks, the price action has been quite aggressive. And what I envisage is that looking at the entire market scenario and also looking at the auto index, there seems to be some point of exhaustion seeping into the index itself. And that could probably trigger some reaction to the way down. So now the question is whether it is a time to short the auto stocks. The answer could be mixed, because there are certain stocks like M&M, which have already started indicating some bearishness, and like the guest said, the two-wheeler stocks are the ones which are on the weaker side. So one should continue to have a mixed approach in the auto space, while the names like Escorts and Tata Motors continue to do well. So you could look at that from a bullish perspective, while Hero Moto, Bajaj or TVS, TVS is going to start the decline, but I feel that on the bearish side, you could look at Bajaj Auto and Hero Moto as a short candidate. So these are some names which are looking to be in action, and I would definitely have a mixed approach in the auto index with a buy and a sell.
Okay, all right. So you have to be selective when you're looking at auto stocks, just like how our fundamental analyst had pointed out. Let's bring on board some queries as well. A lot of questions have been lined up. First one I want to address is from Neha Kakkar, and she wants your view on Tata Power. Last 3 months, the stock has seen a very strong momentum. Yes, off late, I think on last 1-2 trading sessions have been a bit muted or weak on the weaker side. But overall, it has been on a multi-month high. Talk to us about the trajectory from here on. What do you foresee?
Yeah, so Tata Power had an excellent run, but we have to consider that Tata Power is not like your general. And in fact, in the entire power sector stocks are quite sticky in nature. So if you're looking at it from an investment point of view, then yes, you'll have to give it some time. And when you take a look at Tata Power itself, right, the entire EV theme play, it did had its fair run few months ago, but now that EV theme has also dried out, and as a result, what you're seeing on the charts is that the entire stock is undergoing some consolidation. Yeah, well, it did revive from the June lows, but then it still continues to expect some resistance zones around the 245 to 250 mark. So unless 245 to 250 mark is really overcome, one should not look at Tata Power either from an investment or a trading point of view. But then if you are looking at it from a quick trading point of view, I would definitely engage on the short side.
Okay. All right. We are a little pressed on time. Quickly want you to address two stocks which our viewers have written to us about. Anandita Singh wants your view on HDFC Bank and Shashidhar on ICICI Bank. So can you give us a quick comparison of the two?
Yeah. So first, let me go on to HDFC Bank. So the HDFC Bank has done quite well. Post its numbers, it did manage to ensure that it could spike up some good momentum in the bank nifty as well. So what I see is that on the HDFC Bank, it has managed to overcome a very important value resistance zone around the around 1500 mark. So now it has to cross the 1500 mark to first it overcame 1400 and then it went on to meet its target at 1500. So it is at again an inflection point similar to Bank Nifty. So now if you are going to expect a decline in the Bank Nifty, HDFC Bank is at that moment. So now HDFC Bank has started signaling a reaction to the way down. So expect a reaction to the way down, and if you're looking to buy HDFC Bank, the levels would be 1400. Otherwise, it's a short trade possibility for the next few days.
Okay. How about your own preferred ideas and picks that you have for our viewers today?
Yeah, my preferred approach would be on a long and a short. So I would go with a long, like I said, on the banking space. So I would be looking to sell IndusInd Bank. IndusInd Bank has given a fresh turnaround. And if the markets were to trade lower, that would be the stock. So sell it at 1060, have a stop loss at 1075 for a target of 1040 to 1030. And the other long would be in Tata Communication, where I saw some short covering from the OI data. So based on that, I would look to buy it at 1127, place a stop loss at 1112 for an upside of 1150 to 1165.
All right. Great. Thank you so much for joining in, Raja, and helping our viewers out with their queries and sharing your analysis and your readings of the market and a host of stocks that could be buzzing today. With that, it's a wrap on Morning Trade. Thank you so much for watching. Stay tuned to Money Control. Markets with Santo and CJ comes up next.